The Labour budget yesterday was the first Labour budget for 14 years, and there were quite a few changes mentioned. One of the biggest ones was for employers' NIC. A lot of people think this might not affect them, but there's a good chance that it could do if you're an employee. We've got lots of clients who are employers. Some of them will gain from the budget and others won't. It depends upon specific circumstances. One of the first things that was mentioned is that employers' national insurance is going to be increased from 13.8 to 15%. So there's a 1.2% increase there. This was bad enough, but it wasn't the worst thing. What the government actually decided was that the threshold for paying employers' NIC on an employee's salary was going to be decreased from 9,100 to 5,000. So there's an extra 4,100 of an employee's salary which is going to be liable to employers' NIC. Now, the new employers' NIC rate is going to be 15%, so on that reduction of 4,100, there's an extra £615 employers' NIC that's going to be payable, and that's going to be payable for every employee who earns more than 9,100. The government did try to compensate a bit, and there's an employment allowance that employers can claim. It's currently £5,000, and that covers the first £5,000 of employers' NIC contributions. That's going to be increased next year to £10,500. So it's quite a good increase for employers. So if you're an employer with maybe 6 employees each earning about 30,000, you're not really going to pay much more. You might even save a bit. If you've got more employees, or if they earn more money than that, chances are your employer's going to be paying more employers' NIC. Now, employers aren't going to like that. Employees might think it's not going to affect them because employees' NIC isn't increasing. The problem employees might have is that if employers are paying a lot more costs to employer, then when it comes to pay rises and things like that, they could take that into account and you might not get as big of a pay rise. Another thing for employers to consider, you might be a small employer, so you might not be affected by the employer's NIC. But if you've got staff on the living wage, that's going to go up by 6.7% to £12.21 an hour. So if you're a small business, maybe a local cafe, florist, something like that, you've got 2 or 3 employees on national living wage, it's not the employer's NIC increase that could affect you, but it will be the increase in staffing costs of 6.7%. One of the things for employees is that, income tax hasn't increased and employees' NIC hasn't increased, but at the same time, the personal allowance has been frozen at £12,570. It's been roughly this amount for 4 or 5 years now, and the government have decided that it's going to remain frozen until 2028. So that's the next 3 tax years. The problem with that is that if you get a pay rise each year, the tax allowances are staying the same. So if you remain a basic rate taxpayer, you'll end up paying on your pay rise 20% tax and 8% national insurance, 28%. So if you get a £1,000 pay rise, you're actually going to pay an additional 28% in income tax and employees' national insurance, so you're only coming out with £720. We also go back as well to the increase in the employer's NIC. So on that £1,000 that you're receiving, your employer will have to pay £150 employer's NIC on it. And that's when your employer might start thinking about reducing pay rises. A lot of employees are on the living wage. And for years, if you've been on the living wage and you're part-time, you've been below the tax thresholds. As from next April, because the living wage has increased, if you're working 20 hours a week and pay the living wage, you're going to be liable for tax and employees' national insurance. So it's probably the first time I can remember, especially for tax, that somebody who's part-time on the living wage will be paying tax. You might only be doing 16 hours a week because you're claiming some working tax credits, and that's the maximum you can work. So if you're working 16 hours a week claiming tax credits, you won't be paying more tax and national insurance next April. The problem is that's not the end of it though, because if you are doing 16 hours a week, your employer is again caught by this employer's NIC, and they're going to have to pay over £600 extra employer's national insurance on your pay. And it's quite a large amount if you're only earning £9,200 and they're having to pay an additional £600 on that. So it could start affecting people's job hours and things like that. Capital gains tax. We thought capital gains tax for landlords, for instance, might be being increased. At the moment, if you sell a rental property, the capital gains tax bands are either 18% or 24%. It did used to be 28%, but it was reduced by the last government to 24%. And the Labour government have decided to keep those rates of 18% and 24% for the sale of residential properties. So this doesn't include your home, because if you sell your home 99 times out of 100, there's no tax to pay on it, especially if it's always been your home. But if you're selling a second property, that's when the 18% or 24% capital gains tax might be payable. At the same time as that, you might have some shares in Shell or BP, somebody like that. Before the budget, the capital gains tax rates for selling shares was 10% or 20%, depending on your income. That's increased as of yesterday, and it's increased to 18% and 24%. So it's now the same as for residential properties. One thing that was talked about was business asset disposal relief, and this is for entrepreneurs, business owners, farmers, people like that, when they come to sell their businesses, when they come to retire. At the moment, on the first £1 million of profits, you only pay 10% capital gains tax. There was talk that this could be abolished, although there's been some form of business asset disposal relief or retirement relief that's been around for decades. So the Labour government have decided to keep it. So it's currently £1 million and you pay 10% tax. As from April 2025, it's still going to be on the first £1 million and you'll pay 14% tax. And then from April 2026, it's still going to be £1 million and then you pay 18% tax. Anything above £1 million, it looks like it's going to be taxable at 24%, which is the maximum rates of capital gains tax on shares, businesses, residential property. There's an annual exemption for capital gains tax. A couple of years ago it was £12,300. The previous government reduced it to £6,000 and then reduced it again to £3,000. The current government is keeping that at £3,000 from the 6th of April 2025. So if you sell any asset, a second property or shares which could be liable for capital gains tax, the first £3,000 is covered by the annual exemption. Inheritance tax was another subject that was going to be looked at in the budget. The Chancellor's confirmed that the lifetime allowance of £325,000 is going to be frozen from 2028 to 2030, so that's an extra 2 years. The issue with the lifetime allowance is it's been frozen at £325,000 since 2009, so it will be frozen for 21 years. And this, of course, will bring a lot more estates into paying inheritance tax. As from 2027, pensions, normally pensions which you've not started to claim, are also going to be liable to inheritance tax as well. So at the moment, if you're under 25 and you've not claimed your pension, it's not liable to inheritance tax, but as from April 27, that's going to be changed. One area of concern was agricultural property relief and business property relief. So this is for farmers, company owners, partners in a partnership, things like that, who, when they pass away, if they've still got their business, then they can claim 100% inheritance tax relief. What the government have decided is that they're going to leave that as it is until April 2026, which was very welcome. But from April 2026, it's only going to be on the first £1 million. So if you've got a farm worth up to £1 million, there would still be no inheritance tax to pay. From April 2026, anything that goes above £1 million will get 50% agricultural property relief or business property relief. So what this in effect means is that if you've got £2 million farm or business, the first £1 million you get 100% tax relief. The second £1 million you get 50% tax relief. So you'd end up paying 20% inheritance tax on that second £1 million. So that's 200,000. Landlords are also being infected by the changes to stamp duty. Now, stamp duty at the moment, so if you're buying a property, the first 250,000 you don't pay stamp duty on. If it's a second property, that's a separate issue. But if we look at normal property first, the first 250,000 you wouldn't pay stamp duty on. That's being changed next April, so that the first 125,000 you don't pay stamp duty on, but the second 125,000 you pay at 2%. So anybody buying a property before April 25 for 250,000 wouldn't pay anything. Anybody after April would pay 2% on 125,000. The issue for landlords is that landlords have to pay the additional stamp duty charge as well. Up until the budget, the additional stamp duty was 3%. So if you've already got a home, you're buying a rental property, a second, a third, a fourth rental property, you would have been paying additional stamp duty of 3%. As from today, that's been increased to 5%. So if you buy a new rental property today for 200,000, the stamp duty has just gone up from 3% to 5%. What landlords need to bear in mind from April next year is we've also got the increase on the 125,000 at 2%. So the first 125,000 stamp duty free from next April. The next 125,000 is 2%, plus landlords have got this 5% on top. So if a landlord buys a new property to rent out after April next year, they're going to have a stamp duty charge of approximately £11,000 or £12,000. And I think that's where I got.